Alright, yo, what's up everyone? Welcome back to Trading Walkthrough to Profitability, episode 2. Here's what we're going over in this episode. Simple 4 steps. Step 1, how to place a trade. Going through trading view, how it works, how you're going to be entering and exiting trades, orders, limits, things like that. Step 2, paper trading, funded accounts, and live accounts, the difference between them, the benefits, drawbacks, just overall explain how to actually start trading, where you're trading, things like that. When I get to this step, it'll make more sense. And then step 3, timeframes. We briefly went over timeframes in the last one, but go deeper into it today. How to change your time frame and what it actually means to be in a different time frame. And then for step 4, highs and lows. So this is basic, market structure is all we're getting into. So for step 1, how to place a trade. If you have watched the first episode, I definitely would recommend you do. If you haven't, so first thing you're gonna do, go onto your chart, button here, trade. If you press that button, you're gonna get this fairly scary menu on the side. It says market, limit, stop, and stop limit. So all these mean market is current market price. So if you want to buy right now at this very price, all you have to do is press market, press buy. Or if you want to sell at this price, press market, press sell. If you want to sell at a different price and you want to set your order before you want to actually enter, so let's say I want to enter at 500, 25,500. I would take my limit order to 25,500, if you see there. And if I press sell, as soon as price hits my order, then it will enter me into the trade. So it's more of like for use in the future. And that's pretty much what limits are. Stops are very similar, but there's this thing called spread on stops. So with this, you can't place a stop order above current price if you're trying to sell, or for buys you can't place a stop order below current price. So you can see that there. If I try to place a stop order below current price, it's not going to work. So it's more for if you want to confirm that I want to buy upwards when it's going upwards, or when it's going downwards for stop sell orders. And then stop limits, not really useful. I wouldn't bother with stop limits. Mainly you're going to be looking at market, limit, and stop. More than anything, all you need is market and limit. Stops are very specific situations like trading news and things like that. So that's just a basic way of how to place a trade. Now I will get into take profits and stop loss. So all this is a set amount of risk and reward that you're willing to take on a trade. So on this buy at this current price, let's say I'm willing to risk 500. If I place it there at this price, I will be exited out to prevent me from losing more. So if it was to continue going down, I'm protected and I'm out of the trade. I've already hit 500, I'm okay. Same with reward. So the take profit is there to keep you safe from if it goes up and then it comes back down. You want to just take your portion of the profits and exit the trade. Final thing for going over this is lot size. So lot size is essentially how much of the thing you're going to buy. Minimum you can buy is 1, which as you can see it affects the risk and the reward. If I place 2, I have a greater reward but a greater risk. So it's more, if you're looking to take bigger wins and smaller losses, it's more recommended to go for a lower lot size and then take more trades, so you're willing to risk less money per trade, but in the long run you're able to trade for more overall. So that's step 1, completely finished there. Step 2, paper trading, funded accounts, and live accounts. I've had some questions about this one. How do I actually start placing trades? How do I get onto a chart and place a trade. It's all good showing you how to, but how do I make an account? How do I get a broker? Once you get onto TradingView, if you press the trading panel here, it will come up with this huge list of brokers. First thing you're going to do, you're not going to look to put real money in. You're not going to look for a funded account. Paper trading, immediately, you need to straight away get onto that. All paper trading does is essentially fake money that you can use to practice trading. So if you can see, this account has 250k account balance. It's not real. If I were to place a trade on this, I could place, you know, 100 unit lot size, and it won't matter. See, I can place that. None of this is real. This is all fake money. I would definitely recommend you start paper trading before you risk any money, before you pay for an account, before you put any of your own personal money into trading. Immediately go for paper trading, learn how to trade first, and then you can take the risk. So once you can get about 3 or 2 months of profitability consistently, then you can look into, you know, spending some money, taking some risk, and hopefully making some return, because that's what this is all about at the end of the day. If you then pass the stage of paper trading and you feel confident in your strategy, you can then look into either getting a live account or a funded account. First thing I would do for myself is look into a funded account, because a live account, you carry so much risk that, let's say you have £2,000 of savings, that 2,000 can disappear in moments. Like, it's so easy to risk too much. But with a funded account, you're protected in ways such as the account will only cost you a set amount. Anything you lose or gain on the account won't matter until the account is passed. I'll go onto my broker for my funded accounts, and I'll show you essentially how it works, what the plans are. This is Alpha Futures, so if you trade futures, this is probably the one you're going to be looking at. So here we go. This is essentially their rules, their targets, how the accounts work. So if you look, you've got $99 a month for a 50k challenge. So it's not like you just get a 50k account, you can withdraw it. Of course not. So you pay $100 a month. You start with 50,000. They get a 10% commission from everything you make over 53,000. As you can see, profit target 3,000. So all that means you have to earn $3,000 on the account in order to pass the account, and then everything after that, you get a 90% profit share of that. There's also this thing called max loss. So on the account, there's a 2,000 max loss, so you're not able to go below 48,000 on that account. So if you're on a 50k account, your max loss is 2,000. If you drop below 48,000, they will take the account away and you can't trade it anymore. Once you go over 53,000, that's when you pass the account and you can go into the funded section, which is where you can trade with the 50,000, and everything you make of that is pretty much yours, with the obviously 90% split. Max daily loss is on some brokers, it's not on all of them. For my personal broker, it's 1,000 max daily loss, so realistically it's gonna be 2 days of max daily losses to lose your account completely, which is completely fair. You shouldn't be risking that much on a funded account anyway. You're trying to keep the numbers of your account high enough to pass, while risking enough to pass and stay safe from failing. And yeah, that's pretty much everything about funded accounts and how they work and how you can get yourself one and how to get involved in using real money. How I would recommend to start, because that's how I've started myself, and it's working out quite well for me. Now, your third option for starting to trade as well is a live account. So what that is essentially using your own capital to trade with. This is probably my least recommended option. It's very high risk with it, little to no reward. Yes, you can take some large trades and make some decent amount of money, but the risk that comes with it is so easy to lose it all. At least with like a funded account, you're protected in the way that it's only that $100 a month that you lose. You don't, outside of that, all the money you lose, that's theirs to deal with. You know, it's got no impact on your actual savings yourself. So I would 100% recommend going for a funded account over just live trading yourself. Right, away from how to trade, brokers, all that stuff, we're going to get into some charts. So we're on step 3, timeframes, how to change time frame and what it means. So as you can see, right now we're on the 5-minute time frame. Briefly touched into this in the last video. All it means is each candle is worth 5 minutes of action. So within the 9:25 to 9:30 period, this candle will be showing the price action. So within the past minute and 20 seconds, this is how much it's moved. It's gone down to here. If you watch the past video, you understand how wicks work and the candles. So it went down to here, currently is here. After 5 minutes, this candle will close, and then the next one will open. We can change the time frame to see more candles or less candles per amount of time. As we're on the 5-minute right now, every 5 minutes there'll be a new candle. If we want to see the 15-minute, this is the exact same price action being conveyed, but just across larger candles. So each candle, see, this is worth 15 minutes of price. So this is 3 of those 5 minutes candles combined into one. And it's the exact same on every time frame. If we go to the 1 hour candle, it's all the same price, but condensed into 1 hour. So this 1 hour candle, if we go into the half an hour, see, it's just split into 2 candles, 15-minute. It's just split into 4 candles. It's just the same. It just splits it up or condenses it. Now, the way you can use this, if you look on larger time frames, and you can see, okay, it's fairly going down within these past couple of candles. We can look at this and see we're likely to continue going down. We've been going down for all this time. So if we drop to a smaller time frame, we can see, we're looking fairly like we're going to start going back up again. Like it's going down, but we're getting a bit of movement to the upside. So this can just give you more intel onto how the market's actually moving, like long-term, short-term, and it can just influence the way you want to actually trade it. And then finally, for our last bit, highs and lows. Now this is actual market structure we're getting into now. So brief explanation. A high is a move up and then a move down. All that is. This up here is the high. Similarly, a low is a move down and then a move up. This is the low. Now, if we look at the chart, it's a bit different to understand, but you can spot them out. So if we look, move down and then a move up. Where's the low? This candle wick here. That's the low. And then what did we get after that? A move up and then a move down. So where's the high? This is the high, the wick of that candle. So if you can remember these two, a move up and then a move down, and then a move down and a move up. Just the peak of these two is the high and the low. Quite simple, but it tells you a lot about market structure. So now what I'm going to get you guys to do, go on to TradingView. You should have had it from last episode. Identify 5 examples of a low, a move down and then a move up, and then 5 examples of a high on the chart. So a move up and then a move down. Doesn't matter where it is, what time frame. It happens on every time frame. So as you can see here, move down, move up, there's the low. Move up, move down, there's the high. All I want you guys to do is identify highs and lows in the market, and then leave a comment on the video, say you've done it, and check in for the next episode. So yeah guys, that was just a brief second episode going over how to place a trade, paper trading, funded accounts, all that good stuff. Market structure, highs and lows. Remember to do your homework, find those highs and lows, comment on the video, tell me when you've done it, and then check back in for the next episode. We're going to be going over more confluences next time, actually reading market structure, and yeah, so keep out for the next episode.